Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here is a Chief Executive Officer of Treasury Consulting LLP, and today we are covering another interesting topic. Although this is little old in the sense like there is an investigation going on, but still we would like to cover this topic because this is a part of the capital market, and this is all about the Yes Bank QIP, and this is all about Yes Bank QIP. Now, QIP stands for Qualified Institutional Placement. Now, as you very well understand that 7th and 8th of September 2016, Yes Bank came up with a QIP of $1 billion in Indian capital market. And you very well also understand that Yes Bank is amongst top 5 private banks in India and it is growing very good. And we are happy that the way Yes Bank is growing, it is doing a great job. There is no doubt about that. But this video is particularly covering that what did happen in the QIP and why the Yes Bank deferred the QIP immediately one day after the launch. Something we would like to cover. Now, if we go down, if we go down, first of all, let us explain you what do you mean by QIP. QIP stands for Qualified Institutional Placement. It means that it is a capital raising tool primarily used in India whereby a listed company can issue the equity shares or fully or partially convertible debentures or any other security other than the warrants, because warrants are the call options. They are given to iBankers and sometimes they are given to employees also, and warrants are a kind of it's an alternative to ESOP, right? So it is a capital raising tool primarily used in India whereby a listed company can issue equity shares, fully and partly convertible debentures and warrants to a qualified institutional buyer. Apart from the preferential allotment, it is a speedy way, because preferential allotment is apart from the preferential allotment and private placement, this is a speedy way of this is a speedy method whereby a listed company can issue to a selected or a group of person. So there is no point that you have to go to 100 people or 200 people and you have to convince them. You already know that whom you are supposed to issue, who are going to be your buyers, at what rate you are agreed, book building, and all. So processes are very limited versus an IPO. So there is no doubt that QIP is the better option than IPO. QIP scores over the methods because the listing form doesn't have to undergo elaborate. This is what we mentioned and stated. Like if you go for an IPO, then you have to go through hundred of formalities, and it might take some time. iBanker need to work, so a lot of fees, professional fees would go in. In case of private placement, so there are three alternatives for a company. One, of course, is the private placement. Second is your qualified institutional placement, and third is the preferential allocation. So this time, yes, when go ahead with qualified institutional placement. Although this is not a forum wherein we should discuss the difference between IPO, QIP, and preferential allocation. But if you ask me personally, then I would say that QIP and private placement stands little best than so-called preferential allocation. But nonetheless, so, and SEBI has introduced the QIP processes for the introduced the QIP processes for the listed companies in India. And based upon that, Yes Bank has decided to go ahead with the go ahead with the $1 billion to raise the fund. Of course, fundraising is mandatory. In our view, they wanted to raise the fund from Nirma, because if you clearly recall that Nirma, which is a FMCG or a detergent-based company, would like to buy the asset of the Indian arm of a cement major, which is Lafranche, right? And for that they need approximately 9,400 crores. So if Yes Bank would be able to raise $1 billion, then they are able to fund that, because in Nirma, Yes Bank is a leading player who is giving money to Nirma to raise $1 billion. Now, who can participate in this issue? The specified securities can be issued to qualified institutional buyers who shall not be the promoters or the related promoters of the issuer. Of course, this was not the case in case of Yes Bank. The issue is managed by SEBI registered merchant banker. Now, who were the three? Goldman Sachs, Goldman Sachs India, CLSA India, and Motilal Oswal. These three were the M bankers who participated in that. The private placement is placed on the website of the stock exchanges and the issuer with the appropriate disclaimer to the effect that placement is meant for qualified institutional buyer. It is not for the general public. That is what it matters. So qualified institutional placement, I already mentioned, it is not like your IPO, as simple as that. So this was all about the scene. So what did happen? A board meeting happened roughly in April. April, I think it is 27th April or something like this date, when the board meeting did happen. And in this board meeting, yes, it was 27th April when the board meeting happened. And in this board meeting, what Yes Bank did, Yes Bank announced that they would like to go ahead. They would like to go. They would like to go ahead with the capital raising program of $1 billion during fiscal year 2016, depending upon the earnings, of course. But there are few specific, like what we mentioned in this video, that QIP is a good platform. In fact, three good platform like private placement, preferential allocation, and QIP, versus an IPO wherein you need to waste so much time, effort, and energy, and so on and so forth. So it is a good platform, but there are certain rules to it which you need to follow these rules. So these are these rules. Now, if you go at that, we have LODR, listing obligation and disclosure rules, which has been mentioned by SEBI. You can see the ICDS, SEBI ICDS 1991 in that regard. So 7th of September, Yes Bank said it would like to launch $1 billion QIP. 8th of September, it withdraw it. And once they withdraw it, they given a statement, which is a very good statement, which is effectively 8th September, they given a notice to the stock exchanges announcing that the withdrawal of the QIP. Yes Bank said due to the extreme volatility during the trading day, and because of the misinterpretation of the new QIP guidelines, Yes Bank has been advised by the appointed merchant bankers to defer its proposed QIP. Now, Yes Bank should have explained what do you mean by the proposed, what do you mean by the misinterpretation in the guidelines. But nonetheless, if we look at misrepresentation from our side or from the ICDR side, then we will get to know that the section 21 subsection 1 and section 21 subsection 2 of the LODR stands for listing obligation and disclosure rules, clearly states that the company has to inform the stock exchanges at least 2 days in advance, that so that it is conducting a board meeting and specifically to raise the money via QIP. But that not happened, because Yes Bank presumed that they had a meeting in April, which is roughly 27th April, whereby they declared that company would like to invest $1 billion. Company would like to raise $1 billion using QIP. So they misrepresented the thought side. They thought that look, it's fine. Why there is a need for an additional board meeting pertaining to that. Section 4(1) of the same act prohibit listing firms from misrepresenting facts to investor. That is currently into investigation, so we are not in a situation to comment. And as per the SEBI, Yes Bank clubbed the announcement of the board meeting happened in April with the raising of $1 billion. So effectively it means that no separate meeting hasn't happened in that regards. However, this should be the case, because SEBI has clearly mandated that if you are raising money, then you should have a separate meeting wherein you should mention that exactly, all the permutation and combination should be given in that regards. So these were the few issues that were there, and because of this a lot of chaos were there in the market, and few issues were also there which are not mentioned by in there, but from the trading side, the orders were given to the bankers who are sitting in the offshore treasury centers. They were given little late, in the sense like they were given when the Hong Kong and both Singapore and Hong Kong were closed. So when next day, take a simple example. Tomorrow you wanted to raise $1 billion, so you should have give the orders, although it is a private placement, or in all three cases, private placement, preferential allocation, and QIP. I agree that there is no need to go to each and everybody and ask for the money. Rather, there are specific set of people. But of course, book building would happen, and you need to take a call whether it is a Dutch auction or a French auction. English auction is something which is not possible. So exactly if tomorrow I wanted to raise $1 billion, or maybe day after I wanted to raise $1 billion, then my treasury should have given the orders to the front office of the banks who are acting as an M banker or a lead bankers like Goldman Sachs India, CLS India, and Motilal Oswal at least 2 or 3 days before, so that the front office can be prepared in that regards. But that not happened. Front office, now tomorrow I wanted to raise the money, and Singapore, and after the closure of the Singapore, note that Singapore is 2.5 hours ahead than India. So if today it is 4 o'clock in Indian timing, it means it is 6.5 in Singapore. So as the Hong Kong, and Philippines is also 2.5 hours ahead. So in both Singapore, when the orders were given, both Singapore and Hong Kong was closed. Investors were at home. Front office desks were closed. Now tomorrow you wanted to raise the money, and tomorrow when the front office people are coming, they are accepting your orders and they are bidding in the market. They should need some time, and of course, if this would happen, the volatility would surely happen because there is a misrepresentation. So all front office desks will assume as per their own. If I am working in a Goldman Sachs and I am given an order today to fulfill it today, and I know that my competitors are also filling it today, which is JP Morgan, Citi, HSBC, Deutsche, DBS, and others, then of course there is going to be little misrepresentation of the fact, and everybody would like to take off its own. So these were the few things that did happen in the case of the Yes Bank, and unfortunately they need to defer the QIP of $1 billion, and currently the investigation is going on. And if investigation went fine, then I think SEBI can maximum impose a penalty of rupees 1 crore on Yes Bank. But whatever happened, that should not have happened. Yes Bank is a good bank. It is fifth largest private bank, growing at a good scale. Services are very good, and nonetheless they should have raised $1 billion and make sure that their commitment to Nirma should have happened. And nonetheless, we'll wait for next time for Yes Bank to launch the QIP, or maybe private placement of the preferential allocation. Time will tell, but this time we wish Yes Bank are doing well in the stock markets. And this is what the last thing which we would like to mention, that the reason which was given is the extreme volatility in the trading session, like which I'm highlighting here. Extreme volatility in the trading session, that has only happened because all the front office desks, they got the orders at the last point. Henceforth, that extreme volatility happened, and SEBI is now investigating the matter. Let us see how the things would move on. But max to max, they can impose a penalty of roughly 1 crore on this bank, and let us see how this would happen. So this was for the today, as to cover you about Yes Bank 1 billion QIP, and of course hope you understood this video and understood the fact that although QIP, preferential allocation, and private placement are easy and uneasy and less bureaucratic versus the so-called IPO and others, but at the same time there are certain rules and regulation which you need to follow, and you should not take these rules and regulation at granted. And you are most welcome to connect with us anytime. You know our brand, foreign exchange, everything that is spreading across the globe. So currently we are on Dailymotion, Dropbox, LinkedIn, Skype, Google Blogger, Google Group, SlideShare, Facebook, Telegram, WeChat. We are everywhere, and you are most welcome to connect with us via our website www.treasuryconsulting.in. We are coming up with a fresh look of our website probably next week. Let us see how the things will move on. Here is our contact details, and you're most welcome to connect with us anytime in that regards. Wish you all the best, and hope you like the video, and over the period we would continue to impose good video on our YouTube channel. Thank you, and have a great day.